What's going on, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is August 26th, 2021. Please go ahead and click the like button on this video. Subscribe to my channel if you enjoy this content. Today we're going to go through the price action, the indices. We have a lot to talk about in terms of geopolitical events going on. We also have the Jackson Hole Symposium, and Powell is going to be speaking tomorrow. So we're going to get into all that. Before we do so, quick first disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades or anyone's trades for that matter. All right, let's jump into the video. Okay, so box scores for today. We had first down day in maybe like 4 or 5 trading sessions. And I know, once we've been up almost every day, it feels like, oh yeah, we're never going to go back down again. But yeah, here we are. So S&P 500 as measured by the SPY down 0.59%. We have the NASDAQ QQQ down 0.64%. IWM, which has been our big leader off the lows from about a week and a half ago, down 1.06%. And the Dow Jones was our best performer, down 0.57%. Breadth was pretty abysmal today as well. So we see our worst breadth in the Dow, only 13% advancers, but really weak across the board. We see 20% advancers in the SPY, only 23% in the Qs, and 25% in the small caps. So funny enough, small caps had the best breadth, but actually the worst performance. But overall, yeah, terrible breadth. All right, let's jump into the price action. And really just to set the stage. So let's talk about the geopolitical events going on. So there was a bombing in Kabul. I believe it was right outside the airport. And that headline crossed the tape, very early in the morning. It was pretty much right as the market opened. And that to me was a pretty big deal because we have this almost hostage situation going on in the Middle East where we have a bunch of U.S. personnel, civilians, military, etc., that have to leave the Middle East and come back home to the United States, as part of Biden's plan to pull us out of the Middle East. So that bomb going off, as soon as I saw that, I was like, that is so not good because we just really, the entire operation has essentially been bungled. Basically over the past decade, really since I've been of age, the whole narrative has been we've given, democracy in the Middle East, we train up their military, all this stuff. And basically we're finding out that was, essentially a lie, it wasn't true, which is whatever. But at this point, it's we had this operation going on for so long, let's just unwind it, hit the undo button. It's almost like taking a stop loss and trading, let's just take our stop loss and leave. But this is adding another element of complexity where now we have 12 dead Marines on our hands, American casualties, and apparently it's been identified as ISIS that was the source of the bombing, the suicide bombing. So now the added layer of complexity, which, this ties back to markets or else I wouldn't be talking about it, but yeah, the added layer of complexity is now the United States is in a bit of a pickle. We have dead Marines, dead military personnel. If we do not retaliate, that definitely shows weakness. If you just allow, schoolyard bully takes, your milk carton and you let it happen, then they know they can keep doing that. Then the next time they might, steal your entire lunch or whatever. So with this, I think it's a very similar situation where, if you tolerate that behavior, then that other party knows that that's acceptable behavior, then they can even push the envelope further. My thought process is, if we let them do that and kill Marines on their soil, then who's to say the next attack does not occur on American soil? So we had this, thing where we want to get out of the Middle East. Now this is another layer of complexity, and with it comes more headline risk. Headlines, hitting the tape, the potential for a new armed conflict. There's always the possibility that this all goes down the happy path. I hope it does go down the happy path. But there's also more Yeah, just more tape bombs that could really hit. So when I saw this hit in the morning, back to our price action, S&P 500, we're already pretty extended. I've been talking about this the past couple trading sessions. And this 5-day EMA, this thing is undefeated. Whenever you're super extended from the 5-day, just know, hey, we're gonna tag it at some point. Whenever you're super extended from the 20-day, just know, hey, at some point we are gonna tag it. So normally I never really base trading decisions just off of a geopolitical headline, but given how extended we were, that was my signal of okay, this is not a scenario where I have a ton of edge just being long everything. So yeah, I started to get much more defensive, immediately once I saw that. But yeah, as of right now, the S&P 500, we're trading right on this 5-day EMA, and we're above that 20-day. So we have Jackson Hole tomorrow. If we do get some more volatility, this 20-day moving average, that's a pretty logical downside target. So I'm definitely on high alert, just to see, do we get there? Also, another logical downside target. I wouldn't be surprised if we tag this, even overnight, this weekly value area high. I actually thought it was very odd. And I had been scalping puts and just stopping out of them for the past maybe 2 or 3 days, because I found it very odd that we just blew right through this weekly value area high and we never retested it. It's very normal to retest these levels once you break out of them. And it was man, we're just not retesting it. What's going on? And lo and behold, this might actually be our retest. So we'll have to see what happens. Let's pull up our NASDAQ. NASDAQ, very similar situation. NASDAQ actually held this 5-day EMA pretty nicely. And that was the thing too. So, we're really extended. We have this event tomorrow where Jerome Powell is going to be speaking. Pretty much everyone's saying he's going to give us a little bit more color on the Fed taper. And it's almost like a binary event where, if he says, hey, the taper, it's on, let's do it, here's the schedule, that could be perceived negatively by the market. Conversely, if he says, hey, there's a lot going on, pandemic is still running rampant, let's hit the pause button, we'll reassess, that could just be, very bullish. So in terms of having an edge right now, a day ahead of that binary event, do I have a ton of edge? Absolutely not. So that is definitely the thing when you're a trader. I think most traders, they think that they should be able to make, the same amount of money every day. Again, I've talked about this before, but, if I can't find a setup, that means I'm not a good trader. It makes me less of a man or less of a woman, whatever. You'll just have these thoughts. But in reality, that's so not the case. There are so many times during the trading year where you just don't have any edge, and it's really perfectly fine to just be okay, I don't have my edge, so right now I'm not going to have all my chips in the middle of the table. And that's really when you're fully invested, it's essentially what you're saying, you're convicted, all your chips are at the center. So for me, it's very important that right now I do not have all my chips at the center. So yeah, NASDAQ still looks good. I mean, this is just at this point a pullback to the 5-day EMA. So it's not like anything has changed dramatically. Nothing. This is just pretty routine. Small caps. Small caps are a big loser for today, and as of right now, it looks like we were just rejected at the 50-day moving average. These small caps, whenever they get traction to the upside or the downside, it just doesn't really seem like there's ever any follow through. So yeah, small caps, definitely not a good candle for these. With this is actually rejecting a key level and then finding support at another key level, this 20-day moving average. And then the Dow Jones was our big winner for today, down 0.47%. And this one's pulling back to the 20-day. Pretty boring action for the Dow Jones. All right, finviz heat map. The heat map was ugly. So check it out. And we had pretty much all the FANG names down except for Amazon. We had Microsoft down, Facebook, Tesla. Microsoft actually received a patent. And this is a really good position on their end. Microsoft, I added this to my, watch this one for a dip list, because, yeah, they got a patent that essentially said, they own the rights to, managing like crypto tokens and like creating new tokens and like helping businesses, establish tokens for their business. So like that to me was like, whoa, this is really cool. That's a power move on their end. But yeah, down nonetheless. I actually tried to day trade this one in the morning because I saw that headline, and I stopped out, pretty soon after, just because I was like, you know what? I like this stock. I feel like I have edge in the stock. But do I have edge on the overall market? Absolutely not. So I stopped out of that one very early at a much higher price than where it closed. And then, yeah, everything, not much else to say. Pretty red day. Sectors. So let's see what performed the best. We had semiconductors up 0.09%. That was our only green sector. We still have at the top of our momentum list the blockchain assets, the Chinese technology, and the home builders, but pretty much everything was red today. So we had utilities, which were our best performer, or not best performer, second best performer, down only 0.25%. And yeah, let's see some of the areas that were hit very hard. Nothing was hit, too bad. Sometimes when we get a really big red day, it'll be like, sectors down like 3-4%. But yeah, everything, pretty evenly distributed this little red day. Style factors also completely red. We had the Minvol, our best performer, which was down 0.48%. So that signals, that safety is back in vogue. And our worst performers, we had the cyclicals down 1.14% and high beta down 1.01%. So let's take a look at my trades for today. Really what I did was just, I got to safety today for the most part. And yesterday in the video, I was like, yeah, yesterday definitely wasn't my best trading day, whatever. Today was basically like undoing a lot of that and getting to safety. So today was, much better in terms of my trading, which is good. I feel like I made, much better decisions today. So let's see, Roblox. So I closed out my Roblox for, modest winner. I closed out for $88. I had paid $86.35. And essentially I was just taking down, some positions. And this was at 10:30, 10:34. This one was at 11. I was just trying to get myself to safety. So I stopped out of Celsius, stopped out of MicroStrategy. Then the only long that I took on the stock side was BEKE. This is a Chinese company, and it was the best performer out of this universe today. So I put that on at 11.16. I'm already in the money on this one. This one looks like, it's essentially like on the mat, completely dead. In my opinion, I do think that Chinese equities are going to outperform United States equities over the foreseeable future. So I'm positioning my portfolio in that way. And BEKE, this closed above the 20-day moving average, which is pretty good. So next level to the upside is 24.47, and I'm going to stop out of this one if we close below the 20-day. So I took a nice high risk reward entry in BEKE today. And this is, just speaking of those Chinese equities, I thought this was super, super interesting. So overnight, I saw like the Chinese indices were down pretty big. Similar to like their typical like crash, just like being down, getting walloped, like destroyed. And typically when that would happen, like while Chinese stocks were really crashing, we would see huge gap downs for all these names. Like it would just be like they would explode lower pretty much. Look at what Futu did today. This is the one that I'm really trading most actively. Futu put in a green candle and juxtapose that with, for instance, Microsoft. Just put in an ugly red candle. Or Apple. Ugly red candle. So Futu put in a nice green candle. It was only down 0.3%, even though, overnight Chinese equities were down big. So I really think that these Chinese equities, they're the spot to be for me right now. Like cryptocurrencies, maybe like a month or two ago, when they were like down on the dumps, starting to make it on their recovery, that was like, all right, I need to focus here. For me right now, that's these Chinese equities. I need to focus here. And we'll see if the data changes, I'll change on that. But look also at JD. JD closed up 1.18%. I actually closed out my JD calls earlier in the day for a small winner, just for prudence. But this just goes to show, like, this Chinese stocks are being allocated to. There's no ifs, ands, or buts about it. PDD, this one that reported, decent earnings. Pretty much just a doji candle, down 2.02%, but yeah, that's a little doji. So it's not like, oh, it exploded lower, filled this gap down here. This is more so like we had an explosive move. And, the market in this U.S. session was also weak, and these not really that weak. So definitely going to keep watching these stocks. And then in terms of options, yeah, this right here, I day traded Microsoft, entered this for 1086, literally at 931. I closed this out for 1053 at 1020. So that's what's super important to me, keeping these stops very tight, because I had a really nice sequence over the past couple days. Yesterday was my first red day in maybe like 5 trading sessions. But what's important for me is when you have, like, I would say yesterday I made, so many mistakes, but to be able to keep, the damage so small compared to when I'm winning, that to me is like, that's the holy grail of trading, literally. That literally is the holy grail. Like, I notice most traders, they don't want to take a stop. They run from these stops like they're the plague. But your stop is literally your get out of jail free card. It's crazy. Your stop is like your secret weapon. Yeah, I took a stop from my SE calls. I had some October calls. Again, took this one off for minimal loss, little paper cut. Futu closed out my October 15th calls for a small winner. Closed them out for 1340. I'd paid 1220, and this was at 1026. I just said taking in options exposure for prudence. I closed out my JD for a small winner as well. Like I just said earlier, closing it for prudence. And that's the thing. Sometimes you close things out for prudence and you realize, oh, it kept going up. But it doesn't mean you made the wrong decision. And I say this all the time, but the most common mistake for traders is they judge their decisions. So like when you make a decision, maybe you have like 3 pieces of information. Let's say you have 3 pieces of info and you make the best high quality decision you can make based off those 3 pieces of info. Then more time passes. And then let's say, more time passes, the price action changes. Let's just equate that to having, 6 pieces of information. And once all those new pieces of information have been revealed and like the price action changes, the stock does what it's going to do, people judged the decision they made with 3 pieces of info, based on what they know now after having all those additional pieces of info. And that is the most apples to oranges comparison, but I see people do it all the time. They could make the worst trade, but if it made money, they'll think it's a good trade. They could make the best trade ever. If it lost money, they think it's a bad trade. And this is, it goes right back to sports. We talk about this all the time, but if Steph Curry gets that wide open 3, he's going to take that 3 10 times out of 10. Is he going to make 10 out of 10 of them? No. He's probably going to make like 4 out of 10 of them. But that still was the best high quality decision. Like, he doesn't miss the shot and then go, oh, well, I should have never taken it. I missed it. Because there's no way he could have known he was going to miss it ahead of time. So same thing with these stops. I just think that's one of the most important concepts. So I think it's important to talk about it. And then, so what else did I do? I took on some puts in the morning. I closed those out for a very tiny winner, essentially a scratch, because the market, was very resilient today. I was like, geez, the market doesn't want to go down. So I closed those out for a little scratch. And then a small winner, 4-cent winner, nothing crazy. I got long some SPY August 27th puts for $1.35, sized them for max loss. Closed those out for a winner a little bit later. Closed them out for 148. So a nice little single. Not a grand slam, but I'll take it, and also take the peace of mind just knowing, hey, if the market had spilled, I would have been perfectly fine. And then I rolled these out in time. I took some September puts for the SPY. And then into the close, the one options long entry I took, I added back my SE. And let's see why. So first of all, C Limited, it operates within the emerging markets. And I was just saying earlier how I think, China and the emerging markets are going to outperform United States equities, in the near future. I certainly don't know, any timeline, whatever. This is just based on the price action I have in hand today. And SE, while the U.S. market was pretty weak, it's just literally like, this looks like the perfect setup. And I've traded this one for a winner a couple times, traded this one and gotten shaken out a few times. But I want to make sure that I stick with this name because I see this target up here. I'm actually going to set an alert there. So yeah, SE looking really solid. I was like, okay, this is one I have to have on the books. This is really like an A+ setup. So yeah, those are my trades for today. Let's take a look at our options races for today. Now let's also look at our CBOE option statistics. So this was interesting. Throughout the day when I was trading my puts, I just noticed like all the options order flow I was seeing was like everyone just loading up on calls. And I was like, man, these people are just like loading the boat on calls into like, binary events, geopolitical risk, extended markets. I just thought it was crazy. And sure enough, the market ended up kind of toppling a little bit later, but his put to call ratio, it's definitely elevated, but it's not showing like any sort of extreme fear or anything like that. So for a day when the market was really red, very poor breadth, not too crazy. Now let's see our options races. And let's see what came in the lead. Tesla's pretty much always in the lead. Well, let's see some of these other names. So we had SPY in second place. Yeah, Tesla just stayed in the lead pretty much throughout the entire day. So let's see some names that don't normally appear on our list. So Google, definitely, this one to be number 4, that's actually pretty rare. And then we have Alibaba, which made our list yesterday, and Snow. So let's take a look at these names. So we'll take a look at Google first. And Google, this is just like such an amazing company. Like, I was about to Google. Let me see. This is just like, arguably like best company in the world. Yeah, down 0.58%, nothing crazy at all. We're still extended from the 20-day. Yeah, players are looking for further upside there. Snow reported earnings, and yeah, nice price action for Snow on that earnings report. So I'm going to be adding this one to my PEG watch list. So yeah, definitely looks interesting. And then what was the other one? And then let's take a look. We'll check out AMC. Let's see what AMC did. I would imagine with the small cap weakness, AMC, yeah, it was weak. This closed down 8.3%. So yeah, we're going to have to see what happens into the next, couple days. I think tomorrow for Friday, nobody really knows what's going to happen with this Jackson Hole Symposium, and all eyes are going to be on Powell for his speech. That being said, hope you all had an awesome trading day. I will see you all tomorrow.